Hey, it's Arthur here. How are you? So why most of the founders fail to raise money? And what skills are necessary in order to achieve that? Well, I would argue it's a very important topic. Why? Because there are very high probabilities of companies going bankrupt. Yes, 92% of companies go bankrupt within the first 5 years of the company. Second, it's not your fault. Yes, you heard me right. If something is not working for you, it doesn't mean you're not good at it. It means you lack certain skills. And that one much easier to tackle. So, about me, I'm capital strategist. I used to work for Ernst & Young. I was CFO, big holding company. I'm an entrepreneur. I founded 36 companies, sold, exited, bankrupted, right? And for 20 years, I'm in fintech and lending industry. So I have enough experience to share with you today what I've learned and seen over the thousand applications and loan businesses we have successfully fundraised. So, there are 5 main skills that decide your fundability. By fundability, I mean the process of you raising money for a business. Here, I talk about debt funding, but actually can use it for the equity funding as well. So, number 1 is financial literacy, how you understand the numbers, how you work with the numbers. Second is document discipline. The discipline is the main skill set here necessary for you to achieve your goals. Then there's a strategy of you planning and executing that. There's a storytelling, how do you put the story of why you need money to raise for your company, for a business. And there's a risk, right? So how do you tackle the risks? How do you show that you understand the risks? And there'll be a bonus skill number 6. So stay with me while I'm drinking my mate. You grab a coffee, another mate as well. And let's dive in. So the first one is the financial literacy. What does it mean? Well, it's the understanding of the basic financial terminology and knowledge of the business, of the lending, of loan agreement, etc. So this is very important as a baseline. The bad example would be a founder who says, I need from 5 to 10 million because the market is big. Doesn't mean anything, doesn't ring a bell for any bank. The good example would be, we generate 300,000 per month, or debt service coverage ratio is 1.65, margins are stable at 18%, and loan repayment covered under 20% revenue stress. This means that the founder understands the principles, the numbers of his business. What's your homework right here? So you need to learn your basic financial language. What's LTV, what is DSCR, what is EBITDA, and all those fancy and strange and scary words that bankers use. As a pro tip for you, you don't need to speak at the level at the people at the banks are speaking. What does it mean? It means that if you don't understand the level, just say it. Just say, well, I'm new into the business. I don't have enough experience. Can you explain me a little bit more how it works and what it is? It's like for me, I like driving cars, but I understand nothing within the cars. So every time I go to a service and they start saying me these strange words about this and how this part is called and this part, I don't get it. I said to them, look guys, I'm not into the cars. Can you explain to me more easy what does it mean? And then they, okay. So somehow, I don't know, people presume that we know at the same level that they are, but honestly, we all have different levels and it's okay, it's normal to have a different level of understanding. Because for me, I share information that I know about the lending and business loans, how banks are operating, because I used to have, fintech companies, I was lending on my own. But I understand zero, for example, in the construction business. I'm not the construction guy. I know square meters and footage and, land value, but I don't know the technicalities of concrete and what are the types of concrete and, with the minus, with the pluses, with all the excess and etc. So just be clear that you really know what you're talking about. And if you don't know, it's okay to say, well, I don't know. Do not pretend. Okay, skill number 2 is the discipline. So you having clean, updated financials and the required paperwork that's done before. I argue that this is the monthly work of any founder to make sure that all the numbers, all the papers are somewhere. What's the bad example? This is the bad example. Look at that one. That's my favorite one. Final version versus free final XXL. The good example will be a data room with all the necessary documents for you for any purpose. If you go for raising equity, they'll ask for data room at some point, even though you send a blurb, then you send a one pager, then you say page deck, they'll ask for data room. The same with the banks. I mean, you can call a bank and talk about your business and what you want and what you like. Yes, you don't need any data there, maybe a few sentences. But if you really want to be like serious about that, you need to have a data room. And even though you're not fundraising, some documents, I believe, always need to be somewhere there. So it's like operating balance sheet, annual report, or your suppliers, your assets, liabilities, debtors, creditors. Everything needs to be in one place. So if you can't find it, this is what I give usually in a workshop. So if I give a task, please find your operating balance sheet for the last 3 months. And then I click time. Like if you can't find it within 30 seconds, it means you have a problem with a discipline. What to do? You just need to get your data together. And the pro tip here, it hurts. It really hurts, and there's nothing you can do about it. At some point, at some level, it's a prerequisite for you to grow, to raise more money, to have really discipline about the documents. So this is the root. Next one, third, the strategy. You need to be clear on your strategy. Why it's important? Because by knowing exactly how much money you need, when, how you will use the money, how you will repay back the money, shows that you understand the process. Because fundraising, it's not a 5-minute game. It's like something you jump on a bicycle and you ride. No, it takes 2 months, 6 months, 1 year, 2 years. I have projects where we are working for 2 years of fundraising, right? So it takes time, and without a strategy, you'll be lost. And lenders, they really hear that. They can really hear that and understand and see that, this guy doesn't have a strategy. They won't tell you, but they'll understand it. So what's the bad example? I need somewhere for 500,000, for 2 million, for expansion, that's it. Okay, can you lend me money? That's a bad example. The good example is that we need 1.2 million euros for equipment, then 300,000 for working capital. We will need it within the next 6 months, and we will repay back through the increased revenue, increased capacity, plus we'll add EBITDA for 17%. This is how it really sounds. Now there are two things. One, I need to really back up those numbers. So if investor or a bank asks me, can you clarify what does it mean? I need to be really knowing what to say, how to explain it. This is number one. Number two, this is what I see. If you really have revenue millions, you can use M, but K, 1,000, millions, 1.2 M. But actually it sounds bad. Actually it's better to use longer words, millions and thousands. Sometimes I see founders who don't have any revenue, they have no balance sheet, no business, but they use K, M, and of course they were employees in some other company, they had billions, and they have used to the thousands and millions, but now they have zero. So be careful what you use with the K's and M's. Homework, put your financial strategy in place. Really spend time on it and have from 3 to 5 different development scenarios. This is what we do in our workshop, because you have point A where you are with your company, then you have point B where you want to go, then you have your funding possibilities. We use capital framework for our job, like how much money do you need, how much money can be given to your company, what are your funding options, and then you put it all together in one piece of framework, and then you develop a few different scenarios. You don't need to make a decision where to go and for how much money you'll be going tomorrow. You need to have a few plans, and then you put it on in one paper, and then you understand what you want to do with your business. So the case, I had a customer, they had a land in city center, very nice land, nothing on it, just a pure land with a good value. So the owner, the founder said, let's build some houses. Let's build 3 big houses at the same time. And they started doing that with his small capital. Then the money was over. Then he found a nice guy, a very nice salesman. He started to sell the flats, even though they didn't have any buildings at all. It's a very good salesman. So they started having the 10-20% reservation payments coming in. They used that money to building. Then at some point they call me, say, Arthur, please help us. We need more money from the banks. I said, well, banks won't give you. You need 30% of the equity. I said, okay, can we give alternatives? I said, yes. There crowdfunding platforms that do real estate financing, they can really help you. So it's LTV, loan to value financing. We helped them. They got 5 million. And they were started building that. And then at some point they said, we need bank financing. I said, banks will not give you money because you still lack the equity. So long story short, banks didn't give them money. They continue building on alternative funding, and instead of building 3 houses at the same time, they're building one. They had all these problems because they need to, resell the flats from these houses to one house. I mean, it's a nightmare. Why? Because there was no capital strategy from day one. Because founder just saw the land and thought, well, it's enough for me to keep my business. No. Fourth skill, I argue, is storytelling. Because if you just put the numbers together and send it to a bank, any person at that side will call you and ask, okay, what do you plan? What do you mean? What are you looking for? What's the agenda? How can I help you? So they are people. Because I always say that fundraising is about math and about emotions. So it's a math game and emotions game. The math game, we cover the first 3 skills. Financial fundamentals, strategic planning, you have all the documents in the data room, that's math, that's logic. But then we go to emotions. And emotions is something that clicks or it doesn't click. If the emotion puts together, there's a story of your business, but don't get me wrong, don't outline all your life like in one document, right? So you need to be really clear on why they need to trust you, and you need to visualize the future. So the bag's example is, here are my numbers, and that's it. Or here are my numbers, we're big market, huge demand, like Trump's doing big, and can you lend me money? No, they need narrative, they need story. Because if you give a story, then they can put the numbers on the story and they can go and say the best thing about your company in the credit committee. Because none of the people in the financial institutions are making decisions on their own. They have analysts, they have people in the room, they check the data, they make assumptions, everything, they make financial model, they score your company, then they go to the credit committee, they make an assessment of your company. And on that credit committee, usually it's the manager, is the client relationship manager that works for you. Usually the manager says, okay, this company is the best because They need to have a story. So the good example is, we have 120 recurring customers, 5% churn, capacity is constrained. So the money will allow us to service 60 more customers, and we will not increase the cost of acquisition cost. This is the story. You can add a little bit how you started, but mostly they care about what's the current situation, what's the plan for the future. Don't put too much attention on what it was before. So the homework is to skill. It's the learn to skill. You go to the YouTube, you type storytelling skills. I, for example, learned it from YouTube. I learned it from the masterclass. It's masterclass.com, and they're very good speakers about storytelling. You can learn it there. I mean, amazing. So the pro tip is, you're competing for a why. It's either my why as a founder to be presented to a bank, why do I need money, what I will do with that, and how all together we will earn on this project, or it's a bank that is putting its narrative on my business if I don't do that. So it's about clashes of two whys. Who wins gets the more. And the story about my business, so after I bankrupted with my steel company, with steel business, I was making calls and understanding what I can do. And I remember one point in my life, I was calling all my friends, all my business partners, and asking, is there anything we can do? And one friend called me one day and said, hey, there's a coal in the port, we can trade that, we can earn money. So I was doing that. I won't get into the details of the story, but the interesting part is I understood nothing about the coal. People around me knew I understood nothing about the coal. I just know the finances, I know the business, but I don't know the coal, how it's done. And after a few trial and errors, I was raising for money. Nobody was giving me money to buy it, because you need money to buy the good and then to sell, and the margins are very low in that business. And actually, I'll put you a video of how I'm filming and sending through the WhatsApp to my friends, to my business partners around Europe to sell the coal, because it was in the port.
Okay, so this is 10,000, this is another 10,000, and the rest of 10,000 is coming tomorrow. So this is currently in a port in Riga.
Once there was a specific deal in Poland, there was a customer who says, yes, I'm ready to buy this and this amount for this and this price, and I'm ready to pay it when the coal is in my place, right? So I don't remember, it was freight on board, or it was I think it was delivery. So they keep pays when it's delivered. And yeah, with that case, I went to my business partners. I said, we have a deal, can you fund it? And they provided me liquidity to buy the coal in a port, and then buy the, service the trucks, they put it in the trucks and send it to a customer. So it is a nice deal, and I got the money because I had a why. The fifth skill is the risk framing. So it's a capability of foreseeing, assessing, and preparing for the different scenarios. What does it mean? It means that you need to calculate the probabilities of you for different scenarios, succeeding, not succeeding. The bad example is, this is one of the mindset frameworks we talk about in the workshops. Nothing will go wrong. Market only grows. I'll be better off anyway. Let it see how it goes. No, it will not work. The best example is, even you have these different scenario calculations. If you have a CFO in-house or accountant, we can find a partial CFO. They do these stress tests and ABC analysis, scenario case analysis, where they calculate. And you can say to a bank, even at minus 25% revenue, or the STR stays above 1.2 and the reserves cover 3 months repayments. So we have enough liquidity. Because remember, bank is doing that on your behalf, trust me. But they want to see that you are also doing that as well. Because if you do that, it hints them that you are really taking care of your business. Because they know that the odds are stacked against you, because business is risky. So the homework is to write down 3, 4, 5 scenarios of different risks. It could be how your revenue goes up, down. It could be how your suppliers are changing, employment is changing, margins are changing, anything that can change your business. Write that down. And the pro tip, banks are right most of the time. Because they lend money only to the business they see that there's a high probability of them giving money back. Because they know the numbers, that 90% of business go bust, and they want to lend money and earn only from those guys, from that companies that can pay back. Therefore, they're right. So sometimes very useful to pick up the phone, call a bank, and ask what you think, to use them as a second pair of eyes. Okay, so after we're done with the risks, there's a bonus for you guys, negotiations. Right, this is one of the skills necessary for us as entrepreneurs to negotiate the best deal with a bank. So its ability to shape the terms and not just accept them. Because usually one of the patterns I see for the founders is that you just accept the first offer, there's no counter offer, no questions, no analysis, you sign it, you get the money, you're right. Well, the good example would be that you say, okay, the numbers are strong, the collateral is there, but we request a lower rate and a partial grace period. And trust me, they do that, because every bank, when they put you on the credit committee, they have these, from to. So they can lend you from this amount to this amount, from this interest rate to this interest rate, for this term to this term. And then they play with the numbers in the scoring model. So for you, it's important to understand how it works and use it for your advantage. So what's your homework? When you're ready, I'm not saying you need to apply now, otherwise you can apply and you don't need to take any money, right? It's always good to have options on the table, right? So you apply for a few banks, you negotiate, and then you see what are the options for your specific business and whether you want to take it or not. The pro tip for you guys is that the competition always yields better results. We can see that. For example, in Latvia, when you started brokerage business, the loan to GDP ratio was going down and the country was back behind all the EU countries. At some point, when we were helping the customers to refinance and the banks were doing that, so we were recovering. And because of the mortgage lending business and the economics there, the interest rate has decreased by 1% in 2 years. So the mortgage rates have decreased by 1% because also the government implemented the law that enabled people to refinance their loans at better terms. So always check, always remember to get the best deal. Final word from my side. So there are from 20 to 30 skills that person on average has. And for average person, for a daily use, we need only 8 to 12 in order to function on a normal level. But for entrepreneurs, we need to max out all the skills necessary to achieve the results. Otherwise, we fail on that. So if you stack the skills, if you worked on them, and this is something you can really, really have an impact, because it's the only thing you can control. You cannot control your employees, your suppliers, your customers, But you can control yourself and you can invest in yourself, because investing in yourself is the best thing you can do because it stays with you. So what's next? You put a like on this content and subscribe. This is the channel I'm doing for business loans, for debt fundraising. This is what I do. This is what I like. This is what I know. And this is how I earn my money with the brokerage company that we run, Offerta Finance. So we do the full scale, full fundraising mandate for companies in Europe. Also, you can download the blueprint. We have specifically made it so it's a one-stop shop. It's a framework that you can download and use it for your business and apply it like tomorrow, do-it-yourself guide. Or you can watch any of the replays for previous webinars. One of the masterclasses I run on a monthly basis. It's completely free. You can also check for the future dates on my website. Thank you very much and have a nice day.